It's episode 4 already of the not-for-profit organization accounting series. So again, we have the main topics and subtopics. So we have finished this one in episode 1. And this one, the fund accounting, also has been finished. Actually, this has two subtopics: the unrestricted net assets, which was fully discussed in episode 2, and the restricted net assets, which was the topic for episode 3. Today we're going to talk about accounting for donations. To give you an idea, I'm going to give you all the types of donations that we are going to talk about and how do we account them. So we have the cash donations, we have the conditional and unconditional pledges. So these pledges here, in simple terms, are just promises to donate. So we're going to talk about how are we going to treat them accounting wise. So we have also non-cash donations, and lastly, we have donated services. Again, the question that we're going to answer is how to account for these type of donations. So let's answer that question after the short intro. By the way, I'm Let's Marbi Igasama and welcome to my channel. Okay, again, we are still on the differences between not-for-profit versus profit accounting, but we are now on the accounting for donations. Now let's go straight to the most common donation, which is the cash donation. I remember that we have talked about this just a little bit in the last episode, but now we're going to discuss this thoroughly. So, if there is a cash donation with no donor restrictions, or even if restricted by the Board of Trustees, as long as it's not restricted by the donors, like in this example, Mr. Baby donated 2 million to Bantay Baby Foundation. The journal entry is just debit cash, and then of course, the credit is contributions revenue unrestricted. It's as simple as that. Now, if you want to visualize how it affects the accounting equation, I have prepared here the accounting equation applicable for NPOs. So we have here assets equals liabilities plus net assets. But the net assets here is subdivided into two: the unrestricted and the restricted net assets. So in this donation letter A, the assets is increased and the net assets unrestricted is also increased. No need to explain further na. So that's it for undesignated or board designated donations. Next is we have cash donations, but the donors placed restriction on their donations. Well, here, we don't really care if the restriction is temporary or permanent. The entry will still be the same. So let's have an example. Mr. Baby donated 2 million to Bantay Baby Foundation with donor restrictions. Again, we do not care if the restriction is temporary or permanent. The entry for this one is still debit cash 2 million. But the credit is now contributions revenue restricted 2 million. And the effects on the accounting equation are increase on assets. The same with this one. But then again, the counterpart is an increase on net assets restricted already. And that's it. Next is we have letter C, which is just assuming that there is a donor who restricted his donation temporarily. So if it is temporary, of course, the restriction will expire and of course the NPO will use the fund. The question is, how will you account for the funds released from restriction? And how will you account for the usage of such funds? Let's have a detailed sample situation to illustrate the accounting for this. So we have Mr. Baby donated 2 million to Bantay Baby Foundation with the condition that it can only be used for scholarship purposes. Further, Bantay Baby used 1.6 million for scholarship purposes during the year. First, upon receipt of the temporarily restricted donation, the entry is the same as here in letter B. Debit cash 2 million and credit contributions revenue restricted 2 million. But as you can see here, the NPO spent 1.6 million out of the 2 million, but it was spent within the restriction, which is for scholarship only. So what will happen now? Actually, there are two sets of entries here. The first set is the entry relating to the release of funds from restriction. which is debit, net assets restricted 1.6 million to decrease the restricted fund. But the credit is net assets unrestricted to increase the unrestricted fund, of course. This is always the first entry if temporary restrictions have expired or if there is an expenditure, but such expenditure is within the restriction given, like in this example. So the restriction is for scholarship purposes only, and the NPO followed such restriction when they spent the 1.6 million. So, the effect of this in the equation is decrease here, but there will be an increase in the unrestricted net assets. So, moving on, there is still a second entry, which is directly related to the usage of the freed funds. So, the entry based on this example is debit expenses. Or you can put here scholarship expenses to be specific, 1.6 million. And then credit cash, 1.6 million also. So the effect of this is a deduction in assets, of course, and a deduction in the net assets unrestricted for the expenses. It is because, as I have told you in the past episodes, expenses can only be deducted from unrestricted fund. I hope you still remembered. So that's it for accounting for cash donations, whether unrestricted or restricted by the donor. But wait, we have an assignment because I need to know if you really understood the lecture so far. So the assignment goes like this. What if Mr. Baby donated 2 million to Bantay Baby Foundation with the condition that it should be deposited in an investment house permanently, and only the investment income can be used for acquiring research equipment and maintenance of such equipment? And what if, during the year, the investment earned 12% income, and the NPO used 70% of the income to purchase research equipment and 10% of the income was spent for its maintenance? Here are the requirements. Number 1, provide for the journal entries. And number 2, fill this table with the effects of these transactions, just like what I did a while ago. The only difference is that you need to get the net effects of the assets, liabilities, net assets unrestricted, and net assets restricted. The answers will be given on the next episode, so stay tuned. So before we end the video, please click like, subscribe, and share, and click the notification bell and select all to be updated on my next videos. So study well, and I promise you it will be worth it. So see you on the next episodes.